excited to hear from you. Always a great speaker. We've mentioned you a couple times in the conference already. That quote of yours about banking with the brands that we love,
Nice.
it's one of our favorites. So take it away.
It's good. It's great seeing Peter right before this. I think this is the small world of fintech, is that Uber Money was built on Green Dot when I was leading their BaaS business. So this always comes full circle. It's a very small but exciting space we all live in.
Awesome.
Perfect. So let me go ahead and share screen, and just if you can just confirm that you guys are seeing it okay on your end. Go into present mode.
Mm-hmm. Great.
We looking good?
Yep.
All right, perfect. So let me just start with a quick intro. So my name is Dov Marmor. For anyone who doesn't know me, I'm the Chief Operating Officer at Railsbank North America. Railsbank is a global embedded financial experiences platform, and we allow companies to build their own financial products embedded into their own user experiences on 4 continents. So the business was based in Europe, 5.5 million end users. We have over 300 customers, and my job is building and leading our US business and go-to-market. Before this, I led the banking as a service business at Green Dot, where we built programs in partnership with Uber, Apple, Intuit, Walmart, Stash, Wealthfront, and a bunch of other big ones. And before that, I helped Currency Cloud enter the US market, which is our CEO's prior startup. So just a little contextual background on me and sort of my experience within the space. So before we get started, first I wanted to define what is an embedded experience. So most people in the finance world really think about, the historical view was a white label or a co-brand financial product where you got to put your brand on someone else's product. And with the advent of APIs and the ability to access external ecosystems to build your own product without actually having to build the underlying piece yourself, this has really shifted the market into creating embedded experiences using financial tools, right? So some examples are, Uber didn't set out to be the world's greatest payments company, but what they actually did was they embedded payments into their app so that you could walk out of a cab and not think about paying the driver. Starbucks built an app that helped you not wait in line, right? They didn't really care about building a bank account. They helped about solving a customer problem. And that's really kind of the core of embedded finance and building embedded finance experiences. And until now, we've seen some great examples from some of the biggest brands in the world, but it's becoming more and more accessible. And I think we're going to see a really large proliferation of brands creating very custom, very tailored products to meet the overall brand promises that they have for their consumers. So as we jump in, I want to start with a case study that we're all going to be familiar with. So let's talk about Apple Card. Now, Apple Card started with, people know Apple for their design and their aesthetic. And that all started with a card. They created this titanium card. I have no idea how much it costs. It must be $50 plus, right? But I think I ended up getting the card because I heard the metal clink, as stupid as it is, and I really just wanted to feel it. And it was just easy to apply for, and why not, right? And since getting that metal card, I did think it was really cool, but it's gone into a drawer and I've never actually used it again. But interestingly, Apple has actually become one of the top cards that I actually use. And it's really interesting why, because Apple didn't think about this as a credit card. In fact, they didn't even call it a credit card. They called it Apple Card. What they thought about it was a tool for enhancing the overall Apple ecosystem user experience. And it does that in a few ways. One is, if you notice their offer is 2% cashback, only happens if you use Apple Pay. It's pretty easy. Everyone takes it. But now I use Apple Pay for all my transactions when in the past I would sometimes pull out a card. So that was one. Number 2 is, I'm always shopping from my iPhone, and not always within an app, but half the time it's from Safari. So Apple Card using Face ID makes it super easy to auto-populate your card details so that you're paying with their card instead of some other card. And it's not about using their credit card. It's about removing friction from shopping on the iPhone. And what that little tool helped me do is now I actually have my kids' tuition on my Apple Card, even though it's only getting me 1%. But because you know what? I just didn't have my wallet with me. And they just made it that easy to pay with the Apple Card. And number 3 is Apple Card cashback goes into the Apple Cash wallet. So it's another way to value the ecosystem of the embedded, money holding capability that's built into the iPhone. So this wasn't about building a credit card. This is a perfect example of an embedded financial experience, and it's truly core to Apple's promise to its customers. And if you look at the market, overall credit card satisfaction for 2021 was way down. Right. And it was really led by, a lot of the big bank credit cards. And they're kind of in this death spiral wheel, if you ask me. Is really, people are dissatisfied with how hard it is to redeem points and all the tricks and this and that. They're dissatisfied with the high interest rates and the fees, right? But the one exception to that is Apple Card. They actually have fantastic customer experience ratings, right? Because they have rebranded what it means to be a credit card. And on the other side, on the core credit card companies, they're mostly public companies that have to produce quarterly earnings. So as their usage goes down, they're going to have to make it even harder to redeem your points in order to keep those margins. So it's a really interesting time, I think, in the overall credit card segment, but in terms of embedded finance overall. So here's why brands are interesting, right? Brands know what their customers care about way more than a bank. A bank can only compete on cashback, right? It's a single vertical financial product. But if you think about brands like Apple, they really want to enhance the brand experience. Maybe it's using a financial product, right? Starbucks wanted to enhance the brand experience. I know Zara could really use shortening the lines in their stores. Maybe they could do that with an embedded experience, right? But these brands have super fans of their companies that want more from them, right? And these brands know what their customers care about, so they can start to customize for that. So let's go through a few examples. So Paceline, if you guys have read in the news, they're the first company that we've launched. Paceline is a health and wellness app where basically they're motivating users to do 150 minutes of elevated heart rate exercise every week. And that is the largest determinant of avoiding heart disease as you get older. And their mission is to turn healthcare from sick care, where they wait till you get sick and then treat you, to keeping people healthy from the get-go. And this app, it's been top of the App Store for months. They have hundreds of thousands of users, amazing retention rates. And ultimately what they're doing is people are downloading that app to stay motivated, to stay healthy. And when they came with this idea for a credit card, I was like, credit card and a fitness app, how does that work? And really, you think about this embedded finance experience is that this credit card, it gives you enhanced rewards for shopping healthy, but also the baseline cashback doubles if you hit your 150-minute streak each week. So imagine I have 15 bucks sitting there, and if I just get on a treadmill for 30 minutes, I can get another 15 bucks. So really, it's not about the credit card itself. It's about another tool to deliver on that brand experience and make the customers that much happier with the brand. And what they're doing in the background is they're creating this amazing ecosystem of health and wellness freaks that ultimately they can then go and create an entire ecosystem around that. A bank has never been able to think about segmenting the healthy part of the population. But if you're good at doing 150 minutes of workout every day, you're probably also good at paying your bills. I think there's a strong correlation between the two. Tesla is another example. So if you guys saw my post earlier today about Jeep, I think every car brand is very similar in this respect. That the car buying experience, Tesla's done an amazing job just reimagining what it's like, and it's delightful, right? But usually at the point that you have to pay for the car, and especially in big value purchases, a lot of the time there is a point of friction in financing. So essentially now you're being outsourced. In my case, when I was leasing a Jeep, it took 2 tours to run my credit. It turned an, oh my God, I'm so excited to get a car, to, oh my God, this is the worst experience ever. I had my 5-year-old with me, and just trying to keep him occupied for 2 hours was almost impossible. But now imagine that when you're going to finance the car, it's all done in the app, right? And they've just lent you $60,000 for a car. They could probably also give you a $10,000 credit limit, and they could probably do it at a 5% interest rate if it's backed by your car, right? You start to think about all of these experiences, and that's just in the financing piece. Now that's happened in 2 minutes and you're happy and you can drive your car off the lot. But at that point, you're done engaging with the Tesla brand, you're done engaging with your car brand. But imagine that you made a contextually relevant card offer to say, actually, we know that you as Tesla customers really care about your carbon footprint. So here's the Tesla card. And if you use it top of wallet and you generate this much spend a month, we're going to lower your payment by $50 a month. But not only that, we're going to offset your carbon footprint. And we're going to do that by tracking your spend transactions, calculating the carbon impact of each one of those spend transactions. And we're going to do something special in that. What it ultimately does is now, if I swipe that card 5 times a day, I'm coming back to the Tesla app 5 times a day, and they're creating that enhanced connection with me. So there's just another example of how a brand can think about creating an embedded finance experience. And another area is fans, right? If you think about fans of Fish or fans of your favorite sports team, really their biggest problem is they can't get tickets to the games they want to because scalpers are buying them all up and just marking up the prices. What if a card could be the membership mechanism whereby fans, instead of getting TSA pre, they actually get first dibs on tickets that are provided by that brand. And they actually get a card in that brand's logo that they can show to all their friends. And they're getting invited to exclusive events, and their points can be redeemed for special upgrades at the stadiums and things like that. Like, this is just another example of, it's not about a credit card. It's not about an embedded financial product. It's about providing an experience. And that's the way that the market is headed. And why are brands better able to do this is that they have the data, right? So therefore, they can provide much richer experiences. Not only do they have the data, but they have secondary revenue streams that can offset the price of reward. So imagine that your primary product has a 50% margin on it. Then you could basically take your rewards and give someone 20% cashback rewards as long as it's applied to your product, and you'd still be better off. So everyone else can do 2%, you can do 20 because you're actually having the rewards applied to your brand and the things that your customers care about. But it's not just about rewards. Think about if somebody comes to a brokerage app to build their financial wealth, a brand can create an entire experience around helping them invest with every transaction, not just the interchange, not just that 1%, but they can prompt them to invest 10% of the Starbucks they just purchased into themselves. It doesn't need to be the credit card's money. It just needs to be that embedded experience that delivers more for the brand. And Peter was former Uber, right? But I think freelancers just have this really unique area as well. So on freelancers, basically, I have a friend, he develops supply chains for massive direct-to-consumer brands, makes hundreds of thousands of dollars a year. We were having dinner the other night, and he basically said, you know what I wish I knew? I wish I knew that I wouldn't be able to get a mortgage once I flipped over to being a freelancer, because the bank would rather see me make 100,000 on a W-2 than 500,000 on freelance revenues. So you literally, if you think about all these platforms like Fiverr and TopTal and Upwork and Uber and whoever else, right? They have two sides of their marketplace. On one side is freelancers who are trying, and they want those freelancers to build their business exclusively on that brand's platform. And they have all the data around their historical earnings, years and years of data. Now imagine that they could solve that freelancer's biggest problem, which is basically short-term financing in between jobs. And they can use all that historical data to meet their needs. This is another example of embedded finance experience that can enhance the overall value a brand delivers to anybody that lives within its ecosystem. So we talked a lot about what's in it for end users, but let's talk about really what's in it for the brand.
I found this on the web.
That's weird. Siri just picked up my voice. Okay. So one is building deeper relationships with their customers. So any transactional brand customer relationship, meaning I buy something and then the brand has to wait for me to come back again. A card has the ability, because you swipe it 5 times a day, to bring you back into that brand's experience 5 times a day instead of once as a transaction. Number 2 is if you talk to any VC, the holy grail of a new product launch is extending the relationship with the customer into a second product and a second piece of value. So this embedded experience can actually deliver on that promise, and you can actually track how many more times does that customer engage with your brand because you've provided this additional product. Number 3 is the ability to get closer. So remember, we were saying developing a great embedded experience is about really thinking, how can you deliver more of your brand promise with an embedded experience? So we gave the brokerage example. I've actually run the numbers. If I invest 10% of every transaction into an investment account. So if I go to Starbucks and I get a prompt on my screen to invest 10% into my investment account because I just bought a Starbucks for $4, Visa says the average credit card customer spends $1,000 a month. Over the course of 10 years, and I've run this number, you would save $18,500 investing 10% versus $2,400 getting a 2% cashback, right? That's only able to be done because of an embedded experience where the card and the app are able to interact seamlessly to deliver that brand promise to the customer. And then the last piece is generate and grow. This just creates an additional revenue stream, an additional contact point for brands to get closer with their customers and deliver that fantastic experience. It's also going to kind of help their customers self-select into that 80-20 and have that 20% of super fans who want everything that that brand will possibly offer really opt into letting that brand know that this is for me. So long experience in platform, done cross-border payments, banking, credit, payments, et cetera. So why credit card? And that's usually the question, like, why is this the place that you went? So to tell that story, let's start in a parallel industry. So imagine the last time you went into a store to buy a razor. Zach, you might not be able to relate to this, but most people can. But essentially, you go into the CVS and you kind of go down to that aisle and you see all the razors, and all of a sudden you notice the price tag that a 5-pack of razors has grown to $25. And you decide to suck it up, you bite the bullet, you're going to go buy it, you try to pull it off the rack and realize that razor is locked. You got to push that button, wait 30 minutes for the CVS associate to come help you out. And this was shocking to me. They wouldn't even give me the razor. They had to walk me to the counter as if I was a criminal in order to actually buy this cartridge. Just a horrible experience around shopping with that brand. And we'll take another example. So I went shopping with my wife for sunglasses about a month ago. And she was, trying on different pairs, big ones, small ones, square ones, round ones. We finally find a pair she likes. Look at the price tag. It's $700. And we looked at another pair, $600, another pair, $500. But when did the price of sunglasses become the same price as a flat screen television? It doesn't make any sense. So if you kind of dig into the research, and there's a great book about this, but basically these two industries are owned by one or two massive players that have market dominance. So razors are owned by Gillette primarily. Sunglasses are owned by this company called Exotica. That's literally, they own everything from the brands to the sunglass huts to the repair shops, optometrists, literally everything. And they're able to keep the prices of these items artificially high. And that essentially leads to absolutely frustrating brand experiences. What's common is the products work, they're functional, they're great, but the entire experience around shopping with that brand becomes monumentally frustrating. But until now, the brands didn't really have to care because they were the only game in town and nobody had to go anywhere. But here's a lot of brands that we all know about, right? So Dollar Shave Club, Warby Parker, Casper Mattresses, these are all the direct-to-consumer brand revolutions that have taken 20, 30% market share from these large incumbents. And what most people don't know is that almost all of the direct-to-consumer brands are built on top of Shopify. And what Shopify is a turnkey ecosystem or platform to run an e-commerce business. Because none of the founders of these companies knew how to run shipping and payments and labeling and inventory management and all that different stuff. Shopify said, don't worry, we got that. Get started at the 90% mark and just focus on your product and your brand and your acquisition, right? And today, Shopify owns 19% of all US e-commerce stores. And I would tend to reverse this, that 19% of US e-commerce stores probably wouldn't exist without Shopify. So why credit card is that the US credit card TAM, there's 500 million cards outstanding and 85% of them are owned by the top 10 banks. And think about the last time that you tried to redeem your credit card rewards. I had a lot of rewards with the top bank only to find out that while they told me I was getting 4 times points, the value of a point they cut by 70%. So literally my points didn't buy anything. And if I actually wanted to use them for any value, I had to open up loyalty accounts with 15 different partners and go search which one was going to have the flight. It took me hours and hours and hours just to redeem it, which is probably the intention, right? Because that creates breakage that you don't want it, right? And this is the exact same example that you saw in the sunglasses and in the razors. They've completely lost touch with the customer experience. But frankly, 85% owned by the top 10 banks meant there was nowhere else the customers could go, right? So why credit cards? If we could build the Shopify for credit cards, our customers wouldn't feel like this anymore, right? The end users would actually be delighted by their experiences because those experiences would be created by the brands. The financial product would be a mechanism of delivering the experience and not the revenue generator by itself. And all of a sudden, you have this massive push to make it a fantastic experience for the end user. So that's why credit cards. And why haven't credit cards been innovated in, right? So basically, you only had 2 options. So the market was an off-the-shelf co-brand. So think about, your Marriott card, your American Airlines card, only available to the largest of the large brands. And when you click on the offer, it takes you to the bank's website, to their app. And essentially that brand is relinquishing control of the customer experience to someone that they don't know, right? First of all, tech companies would never do this, but some of these brands would because there wasn't a better option. Because on the other side, if you wanted to build it yourself, you were looking at a 10 million plus investment. You had to build a specialist team, and most brands, and most CFOs are not going to make that level of investment just to get to a proof of concept. So what we said is, we'll do that, right? We'll create that full turnkey ecosystem, and then we'll offer it to lots of other brands who want to create their own embedded experiences, but not actually manage the really complex parts of the product that live below the surface. Because actually, at the end of the day, customers really only care about the user experience. They care about how that card or bank account or payment interacts with their ecosystem. But what it takes to actually run it, and that sits below the surface, is this monumentally complex ecosystem, right? So if you think about Shopify or AWS, companies like us, we manage the ecosystem and we let the customer design the last mile, right? And that last mile is what differentiates it to the end user, and that's what's going to completely shift this market as this comes to bear. And this is just a really useful sort of infographic that will drive it home as to how do you design a great financial experience, right? So an embedded experience starts with the fact that it lives in the brand's app, right? So that card experience lives in the app the same way that your Apple Card lives in your iPhone, right? What sits below that app, there's two things. One is you have to be able to design an experience that meets all the regulatory guidelines of that financial product, because we're in a regulated space. But number two is you then have to know how to integrate the APIs to each one of those components of the user experience in order to power it and make sure that it works seamlessly. So, companies like ours, that's what's now available through a technology solution, is both the Figma design files and the ability to say, this is how you build a card. And then the second piece is, this is the APIs that power each one of those components. So we're actually able now to deliver on this promise of getting a real functional product to market in 3 months, when before that was absolutely impossible. It was 18 to 24 months. And listening to Peter, a lot of that part was, there is a lot of back and forth if you've never built a financial product to actually know what the heck you're supposed to do, right? Because really great designers will build really great experiences. It doesn't mean that they're legal. Right. So you really have to kind of teach, you have to play the role of that really great professor who writes a lot of really great tools and services that are actually going to allow people to build things on your platform. And then the last piece is that, then that hits the platform layer where everything gets orchestrated and operated. And it's not just technology. It's literally the integration of multiple different downstream partners, all the operations that goes around that, all the risk management, all the compliance, all that kind of sits into the platform layer. And here's where it gets really interesting now. So embedded finance has always been a regional proposition. So, Peter was saying, he built Uber Money in the US, and he built it in Brazil or in Mexico or all these different places. And if you think about a tech company, that actually literally means spinning up entirely new teams in every country that you operate. And you might end up with different user experiences in every different country that you operate. When in reality, they want their product to feel the same no matter where you are in the world. But basically, platforms weren't built that way. So this is kind of big vision CEO thinking. But our CEO said, what if we split the platform layers? So all the APIs are country agnostic: open account, move money, receive money, order new card, whatnot. And then we plug it into the local rail that's going to power that specific component. So essentially, at the end of the day, you can go to a tech company and say, go build your credit card, go build your bank account, go build your payment experience. And we'll handle the rest of passporting across every country in the world that we support. So now you have one product team centrally that's building that customer experience, and all that global complexity is kind of managed under the surface. And that's where this stuff gets really, really exciting, because embedded is no longer going to be a regional proposition. It's going to become absolutely global. And it's going to be something that banks are regional. How are they going to compete? That we're just at the very, very early innings of essentially where this whole thing is going to go. So just at the end, the new world, it's all about embedded. I think that's why we're all here, right? It's not about doing a white label. It's not about a co-brand. And I think, we're at the very beginning of the journey of shifting the mindset away from co-brand credit card, white label bank account, embedded payment experience. Really, we're kind of moving it into this segment of build your own thing, call it what you want, make it unique to your customer. And that's what's going to change people's association with these products and really turn them from financial products into mechanisms of overall experiences. They just blend away and fade into the background. So that's my talk, and happy to answer any questions.
We're out of time. That was a fantastic presentation, Dov. And I loved sort of the journey you took us on as through a great embedded experience, and appreciate you joining us this year. I know you're a second timer here at the Big Bang Theory, so appreciate it.
Thank you so much. Great to be here again.